Us. Now let's talk about gold prices at the top. Gold prices have hit this record high and touched $1,353 and above, driven by the speculative buying that we've seen and also the ongoing tensions in the Middle East. This despite the strong US job growth that we are seeing. On the other hand, you have crude oil. Crude oil prices cooling off by over $1 today, and this is $1 per barrel. The Middle East tensions have eased. Israel is committed to fresh talks on a potential ceasefire as well, which is why perhaps we are seeing that kind of drop, a little bit of a drop when it comes to crude oil prices. But for both of these commodities, let's put in context what can be expected in times to come. And for that, Bjarne Shcieldrop, the Chief Commodity Analyst at SEB, joining us on the show. Good to have you with us, Bjarne. You know, this US dollar is quite strong, and yet we are seeing gold, even silver prices rise to record highs. What are the reasons that you attribute to the kind of phenomenon we are seeing at a time when US dollar is proving quite resilient and strong? Even the Indian rupee seeing that weakness against the US dollar.
It has indeed been quite some surprise, and especially we've seen gold diverge from the 10-year real US interest rate. I mean, previously, gold price used to relate quite strongly to the changes in the US 10-year real rate, forward rate. But, you know, since the end of 2021 and into the war between Russia and Ukraine, suddenly you saw a massive break between gold prices and those 10-year real yields in the US. And the speculation is then, why is this happening? And is it that the argument is typically that China and Asian nations previously buying a lot of US treasuries maybe don't feel so safe buying these assets anymore, seeing how the US is treating Russian assets in US dollars. So they want to be safer. Maybe they want to be rather hold gold as a safe asset rather than US treasuries. You know, that is one explanation. Yes, indeed, we see extremely strong gold prices, and they're not following the US 10-year real rate anymore.
There is a certain hawkishness as far as the Fed is concerned, and the possibility of rate cuts in the US. The possibility of 3 rate cuts, how and when they'll happen, remains a cause of worry. Perhaps the speculation is on account of that. But as we draw closer to the possibility of interest rate cuts in the US, are we likely to see gold prices keep rising higher till then, or can we expect some kind of correction in gold prices on the downside before that phenomenon unfolds?
I mean, definitely. I mean, if we start to see interest rates in the US start to fall as well, and real rate starts to fall as well, you know, that would be actually adding bullishness to gold prices normally, coming on top of the bullishness we see now. Probably a part of the drive in gold price is probably also the inflation we've had over the past couple of years. You know, moving close to like 20% since end of 2019, sort of a very substantial amount of inflation, lifting gold prices in nominal terms, not necessarily real terms all that much. But lower interest rates in the US definitely would be positive for gold prices usually.
Meanwhile, we are seeing this small drop in crude oil prices today, but in the overall sense, how you've seen crude oil prices move, this summer, are you likely to see prices touch $100 a barrel, like some are suggesting? And will that be the kind of rise because of supply-side shocks that we could expect now?
You know, I don't think that the market is pricing in a supply shock due to geopolitical risks that we see in the Middle East, because OPEC do indeed have a very substantial spare capacity. So if we get some disruptions in supply, then OPEC Plus would definitely add more oil to the market. So I don't think it's sort of a deep-rooted concern that we would stand without oil in the market with big loss of supply. We will have what we need, and you know, Saudi Arabia would be happy to produce more if really needed. What we have seen since like early December last year is a steady improving backdrop for oil. You know, a global manufacturing PMI is ticking higher, and now lately we've seen Chinese PMI manufacturing going up to 50.8 for March, and the US going up to 50.3 for March. You know, basically showing that indications that the global manufacturing activity is picking up steam. And, definitely if we had sort of lower interest rates on top of that, that would be continuing further up. So I think that is one backdrop of optimism behind the oil price and why speculators have rolled into more oil, sitting long oil when sort of the global manufacturing activity is starting to move higher. But OPEC cuts have been essential to increase in oil prices, that they've kept oil production subdued through Q1,
Yes.
led to inventory draws, and now we're going to have the same in Q2.
So, Bjarne, this kind of speculation is driving up gold prices. Speculation is also, like you're indicating, driving up crude oil prices. In that kind of scenario, very quickly, if you can tell us how this is likely to impact global equities.
I think, the higher oil prices, this is definitely going to be positive for oil equities, of course. And yes, I do think that we're going to see $100 touched sometime in Q2 or Q3, most definitely, just due to normal fluctuations in oil price and a backdrop of declining inventories. I think as of yet, as long as the oil price doesn't really turn above 100 and move into $110, $120, I think it's going to be a negative for global equities and global economy. I think the global economy can handle like 80, 90, $100. But I don't think that the oil price will stay at 100 for all that long. I think OPEC will supply more oil in the Q3.
We'll keep watching both these developing stories on gold and crude oil, both these prices rising. Of course, today crude oil is kind of tapering off a little, but we've got our eyes and ears peeled on developments that would affect the prices going ahead. Bjarne, thank you for joining us on this edition of Business at 9 with your perspective on this. Meanwhile,
if you like this video, then like, share and subscribe to ET Now.